Ladies and gentlemen, I apologize. Okay. From the bottom of my heart, I'm slightly late. Okay. I have a water, got a coffee, and for some reason I grabbed a protein bar and I have no plans to eat on this stream. I don't know why. Acting like this is not going to be an hour and a half affair, maybe even longer, if we continue to have so much fun watching the most explosive and exciting, markets that I've probably have ever laid my eyes on. Now, CoreWeave was the topic of conversation on my last live stream, which we do a members only live stream at noon. This company is super explosive. Well, I am luckily graced with having new and very exciting friendships. Okay, these friendships are of people that are extremely smart, much smarter than myself. So, to help with this due diligence on CoreWeave, I wanted to bring on the great and powerful Jose Najarro. He's going to join us to talk about CoreWeave. You joined quick, man. That's fast. I just sent you the link.
Yeah, I mean, I'm always on the computer, no matter what I'm doing. What's going on, man? How's everything?
Man, I'm doing great, but essentially, I was just doing a live stream earlier on potentially looking to get into CoreWeave. It's like, I've been looking at this name a little bit, probably since they went public. Never pulled the trigger. The ups and downs that you might have had. I think this is your second largest position, if I'm not mistaken.
Yes.
Please tell me what I'm missing and what can get me to go all in on this name. Because honestly, I really want to, and you probably don't have to do that much convincing.
So first, let me just tell you what I'm bullish about this company. One of the first things that really excites me is they have a really great partnership with NVIDIA and Jensen. And when I talk about partnership, we hear about other. And let me just start off. It always seems like the market, if I'm bullish in one company, means I'm bearish on its competitors. That's not necessarily the case. I think companies like Nebius, companies like Iron can still benefit from this space of just AI compute needs.
But you hate them.
I hate them.
Yeah.
But I prefer CoreWeave. On the top level, AI compute is needed. Massive build out for AI compute. We see it from all these hyperscalers that they are supply constrained. So that's the main reason I'm bullish, right? So that's the problem CoreWeave tries to solve. Now, the reason I like CoreWeave the best is, first, I think they have a really unique partnership with NVIDIA and Jensen. And I don't think this is something that you can kind of measure by reading like some financial numbers. If you just look at all the press releases that NVIDIA has kind of released in the past 2 years, anytime they announce something new, one of the first players to say, yes, Jensen, I'm going to put that into my system is CoreWeave. And I think that goes a long way. And I think this is why kind of NVIDIA has been so great at investing in CoreWeave. You are kind of like that star student for NVIDIA. NVIDIA is trying to build these things called AI factories, which are a little bit different than the data center market. So if you are their yes child, if you are kind of like that perfect kid, you're going to be favored a little bit. So I think that partnership is very unique. And obviously you have platinum partners with like Iran and Nebius or whatever else. But I think this partnership is a little bit more, it's more unique within management itself. So that gets me one. I think that within itself is a nice moat. The second thing is CoreWeave is one of the few players that builds this AI infrastructure to this massive scale, right? You have other ones kind of building 1,000 GPUs, but CoreWeave is the first to have built like a 10,000 plus H100 cluster to build similar massive size of the H200, of the GB200. We're going to see the GB300. I'm going to expect the Vera Rubin, right? If you're able to do it fast, it's super critical in this moment because of this AI race. If you're OpenAI, if you're all these other AI cloud companies, you want to start training or inference as quickly as possible. If some other company is able to train a week or two or a month before you, that can change the whole consumer landscape. So in this AI race, you want to be the first to do it. CoreWeave is if you see, CoreWeave is usually the first out with these massive hyperscale clusters. The final thing, and then I'll shoot it back to you before I ramble too much on this one, is when it comes to GPU AI infrastructure, reliability is super crucial. Let's say I'm Meta and I'm buying 20,000 GPUs. Okay, I can rent out 20,000 GPUs from you. But if out of those 20,000 GPUs, because you're not good at the reliability aspect, 70% of the time, 80% of the time, they're running. The other 20% they're down. I'm paying for GPUs to be down. CoreWeave has had one of the highest reliabilities on kind of their data centers, which is crucial. If I was an AI company, I'm not going to be paying prices if I know the GPUs are going to be down, if I know the clusters are going to be down. I think Meta about a year ago or 2 years ago dropped an article that showcased that for their Llama models. One of the worst things was the reliability of certain GPUs, that they were just going to continue to drop. And that increased the cost of the AI model and increase the cost of engineering. And if you're someone that can increase and improve that reliability, you're going to be able to do premium pricing on these models, and you're going to have a nice selection of customers that are going to be returning customers. And CoreWeave has mentioned in the past that one of the reasons they're able to have a little bit of a premium pricing is because their reliability is so much better due to some of the software stack solutions that they have. So I would say those are the three things, right? They have built massive AI compute. They have the Jensen backing and a unique collaboration. And then you have kind of that reliability. Now, there's obviously bearish thesis, and I'm pretty sure you're going to talk to me or ask me about those, but I'll give you the floor there, Tanner. Muted, but I'll give you the floor after that.
Okay, good. I appreciate the save. Whenever it's just me, I'll be sitting here talking to nobody for 3 minutes before I start seeing the chat saying that I'm muted. I don't have many bearish things to say, maybe other than the valuation or something like this, or if there's a potential that we do get to too much capacity, and then what happens to all of these neo clouds. But I first wanted to ask you more just a couple smaller questions. From what I've been seeing since the Claude 4.5 Opus launch, you probably have seen these H100 rental prices skyrocketing. What happens to these names like a CoreWeave or a Nebius? Would this be beneficial for them, that their overall costs can end up skyrocketing because the supply for the old H100s that they probably still have that are at high demand are getting better pricing? Is that the way to think about it?
Yeah, definitely. At least for certain players, because I mean, you can kind of see that, but a lot of these do have long-term contracts. I think that's one of the unique things with at least CoreWeave, right? CoreWeave, one of the things is many people say their concentration is extremely bearish. They have Meta platforms, they have OpenAI, they have Microsoft, and I don't know if disclosely or undisclosed, they also have Google.
Isn't Anthropic a big one as well?
I don't know if Anthropic has announced with CoreWeave just yet. I could be forgetting it. Okay. But first, they usually tend to have long-term contracts. So I don't know if the kind of variability in pricing might have too much impact on CoreWeave. Maybe if the renewal is coming just at the time when prices are going up, that could be good. But these CoreWeave looks for these contracts of 3+ years. And usually the only ones that can kind of do that are the big players like OpenAI, like the other players. I think Nebius does a little bit more enterprise space. And when you have more enterprise space, sometimes you tend to have like more of a shorter contract as well. They do a mixture of both, right? Nebius has that contract with Microsoft, but they're also focusing on the enterprise market a little bit more. With the enterprise market, you do kind of have more of a shorter time period. So the variability on pricing is definitely bullish for those. So I guess it all depends on kind of the contract, but I think the thesis is, if H100s, and you know, we're about to go into the Vera Rubin platform, if H100s are seeing an increase in price, it just shows you the kind of crazy demand you have for AI compute.
So I remember them talking about their extremely long contracts that they prefer to favor. Was this not the, I think, $6.3 billion deal that they did with NVIDIA to sort of allow them to target smaller businesses that might not be able to get into these long 5-year deals?
Yeah, and that's many people think about the $6.3 billion as NVIDIA backstopping them or protection. And that's not exactly what they're doing with this. It's exactly what you mentioned, Tanner. They only built these massive AI clusters. So the only ones that can build these massive AI clusters are your Metas, your OpenAI. So the ones that can rent them out for them.
Right.
But you can't have a small startup AI company can't do that. They can't front $5-6 billion to build a 100,000 GPU cluster. So what NVIDIA did was NVIDIA uses supercomputers for all of their things, chip designs, software designs, whatever they're working on. They use supercomputers. So they go to CoreWeave and say, look, I'm going to rent out your super cluster for the next 7 years. It's going to be $6.3 billion. But unlike your other customers, you can actually say, NVIDIA, I actually have a customer that wants to rent it out for 2 months. Cut me off those 2 months. I have other supercomputers out there. Get that small AI company to come in there, rent it out for 2 months. Once they're finished, you can give me back my compute.
Yeah.
And that's great because it's like it pushes for NVIDIA. It's beneficial because maybe that next OpenAI, that next Anthropic might just need those 2-3 months, and that allows them to build that. And for CoreWeave is great because now you get potential new customer base. If those customers end up winning really well, then most likely they're going to come back to CoreWeave to build the next super AI cluster. So
I like
I think
that. I
that,
never thought
yeah,
about that. You're essentially opening up the market to be more competitive. NVIDIA is essentially just saying, hey, you can take a little bit more risk on these smaller customers because at the end, we'll buy up the scraps. And hopefully we don't even have to do that. And they end up taking it off. And then if it ends up going right, we might create another massive, new Anthropic that's going to come to buy our chips directly.
exactly. So it's
That's
like the
cool.
market doesn't look at it that way. It's like, NVIDIA is just giving this $6.3 billion because this company obviously has massive debt and they need it. But I think, and NVIDIA has talked about it, is they want to build up this ecosystem. And the best way is to make sure that um, there's no gates or just bumps for those smaller players to become that next big thing. So like I mentioned, I think that partnership with them is extremely well, and it helps them diversify a little bit more.
And then the next thing, I've got a couple more critiques. So this recent $2 billion deal, a lot of people are talking about circular financing, but it's to help essentially use NVIDIA chips for their next 5 gigawatts of data centers. To my understanding, from Jensen said, not including the shell and the power and the land and everything, they have about 30 to 40 billion dollars of that build out is NVIDIA chips. You're muted. Your
Yeah,
your turn.
in 1 gigawatt, right? In 30 or 40
Right.
in 1 gigawatt. Yeah.
Right. So this $2 billion that they gave them is essentially securing maybe 150 to 200 billion dollars of revenue. That's crazy to me. And so this is not circular financing. It might just be a little bit of a coupon or something like that.
I think that's exactly it. It's more of a coupon, but I also think, again, and this is what's fun about investing is you can kind of come up with your own theories. The bears can say, right, this is just, CoreWeave was, unfortunately, right, it does have a nice amount of debt. So it's like, is this just to make sure it continues to be able to fund all that interest is paying? To me, it's in the press release, they actually mentioned the reason NVIDIA made this investment is to showcase that they are confident in CoreWeave's business model, in CoreWeave's growth opportunity. And to me, it's more like a bailout. It's like CoreWeave and a lot of these AI infrastructure plays have been hit with this negative sentiment towards the stock.
Yeah.
I don't know if $2 billion is the price to pay, but you're kind of also paying to kind of snap that sentiment out of the market. Well, look, if NVIDIA is willing to put $2 billion, even though, like you mentioned, Jensen has explained it's pennies compared to what the actual cost of the AI infrastructure it's going to do. But two other things that they kind of mentioned in that press release is, I don't know how, but they mentioned that CoreWeave is going to use NVIDIA's financials to help support even more land growth more land growth and more deals. So I wonder how that's going to work. I don't think they share too much details, but in their press release, they said, we're going to use NVIDIA's financial strength to be able to make bigger and better contracts.
Little cosign on some of those deals, eh?
Yeah, I don't know if that he just is co-signing for lower interest. The other thing is, NVIDIA mentioned that they are seeing strong demand for just pure CPU
That-
solutions.
I was going to bring that up. That was a big part of this recent deal, right?
Yeah, so they're also going to be building just pure CPU infrastructure, from what it seemed like, just to be
Mhm.
able to kind of enter into that market. So, like again, it's that collaboration. It's that I don't think Nvidia feels, I don't know if they feel comfortable or whatever, but I don't think they have that same connection with like your Nebius, your Iron, or some of these other players to go, look, I want to try something new. I know you're building AI infrastructure, but what about if we just do this quick deal where you can put that CPU into the system? I see the market going, let's do something with it. CoreWeave is that yes man, and they've done it really well. And I think Jensen really appreciated it, or management, maybe not Jensen, but management sees that, and that's a unique mode that I really have come to like with CoreWeave.
Yeah, yeah. Okay, so I have a couple more questions for you, and then I'll let you go. But the first one is maybe on the how do you think about the sort of data centers that are being rented versus built to own? I know that this is a little bit of a debate between CoreWeave versus a Nebius or some of these other names. Is this even a factor for you? How do you look at that?
I I think when they were starting off, it made more sense to rent kind of this power shells. Um, and they're still doing that. Recently, they mentioned that they're doing a mixture of all.
Right.
They're renting power shells. They're building their own data center. I think CoreWeave was one of the first to do this. So they had to play it their own way. I think now they're able to also learn from some of these other players. Like, for example, before they used to do more just traditional financing. Now they're seeing that the market is actually open to more of like of convertible senior notes, right? So their most recent debt, I think, was a convertible senior note, opposed to just your traditional debt. And this is something that Nebius and Iron, I know Nebius has done it more of like instead of building actual traditional debt with high interest, you kind of get like that convertible senior note where there's potential dilution, but the interest rate is a lot cheaper. Um, so now that you have more players, I think that CoreWeave also has the opportunity to see what the appetite of financing is and what are some of the great directions to go. So right now, CoreWeave is renting out land, but they're also building out some of the land as well. And maybe eventually they might see that, hey, look, this might shift to a pure land ownage, and that's how they decide to go. But I think right now having a mix, I don't think there's a right answer just yet.
Gotcha.
I think that would be more worrisome when maybe margins start to drop or AI compute starts to decrease dramatically, because then you can kind of squeeze out the margins by not paying that middleman, right? You have kind of that little end. But in the market where you're compute constrained, I don't see it as a big deal just yet.
Um, there was some concerns in videos that were coming out about CoreWeave essentially going bankrupt, and there was a debt concern or something like this. Do you know of this concern, and can you clear up
I
some
mean that
controversy?
the debt is extremely high. It's I think about $14 billion in debt, and they definitely pay a nice amount in interest. I forget what was the largest. So that's the thing. Um, but this is the market. First, the reason the debt is different from all the other players is this has the largest active AI infrastructure built out right now. In
Hmm.
forms of active power, I think they have 590 megawatts as of the last quarter.
Yeah.
Iron, I think, has talked about it in the past that for 200 megawatts, I think that's the one that they're doing for Microsoft. The numbers could be a little bit wrong, but for like 200 megawatts, maybe a little bit less, it was about $7 billion of debt of GPU infrastructure. So if you just times that by 3, you get that 600 megawatts that CoreWeave has, and you kind of get that 14, 15, $16 billion of debt. So mathematically, it's just this one is in a whole different lead in forms of AI infrastructure size. So obviously, you're going to have more debt. In forms of money, I think money is going to be coming in extremely well. There's always a little bit of gap. Just let's say you're buying a real estate property, you're going to be building that real estate property, but the actual revenue is going to it's a little bit of a lag for there. Um, so in the upcoming quarters, I think you're going to see a massive growth in revenue, and you'll be able to see how that pays off pretty. The financing aspect won't be much. CoreWeave has only guidance for this quarter for this year was not that exciting. Based on what we're seeing, the build outs, I think this year you're going to see some crazy growth in revenue. Like, and you'll start to see that financing issue no longer be a theory. But I think any investor should understand that yes, they have high debt. but understand the reason for the high debt. They have the massive AI infrastructure built out already, and that there's some delay between revenue and the actual build out.
How can I even go about starting to value this company? So I find a lot of people, whenever they see a company run up essentially 20% in the last 2 days,
Yeah.
it's hard to get behind that. But whenever you're talking about companies that are growing at 100, 200, 300% revenue growth rates, like those 20% gaps can get filled pretty quickly in terms of the price to sales, or eventually, hopefully, net income. So how do you go about putting fair value on this company?
That is, Tanner, one thing I'm horrible at is valuation, right? That's the thing that I always have the hard time of, like, what can I value this company at? Um what I tend to do, and it's very non
I don't
um
need a price. I just want to
yeah,
know how do you think about
I
what?
let me see. I could see this being in the low right now, sitting on a market cap of $50 billion. Let me start off by saying, and I probably always say that, but this is going to be extremely volatile. If you tell me in 6 months, CoreWeave can either be at 140 or $60, my answer is yes. It could be both. That's how
Mhm.
volatile this stock is. You're going to have any negative news in the AI market, any bearish thesis in this industry could create heavy volatility. So for me, 111, 112 where we're at right now is like small dollar cost averaging, building small position over time, when understanding that the volatility can give us great opportunities. We had $70, $60 just a month or 2 months ago. And I don't think we've ever, I think we continue to see that. Now, AI, other AI infrastructure players like the big boys, your Oracle, market cap of $500 billion. Obviously, Amazon and all these other players are $1 trillion companies, but they have other aspects.
Mhm.
Just on the cloud capacity side, I don't think there's a cap in the low $100 billion range. So that's how I see it. $50 billion market cap, 5 years, I can see a $200 billion market cap. You continue to expand massive data center infrastructure. You kind of look at how much revenue per gigawatt you get, maybe give it a decent price to sales ratio. With the added 5 gigawatts, like I said, $200 billion in 5 years is where I see this. How we get there, crazy roller coaster.
Yeah, yeah. Jose, I think I'm out of time, so I do appreciate you popping on in such short notice. Guys, I mean, like 5 minutes of short notice. Like, you have no idea how much of a gem Jose is. So please check him out. He's on X. I think his YouTube as well. I didn't pull it
That's
up. I
fine.
think
You
it's
can
the
find me.
same
Jose Najarro, I think you should be able to find me.
same similar at, right?
Yeah.
Perfect. Thank you so much, brother. Let's do this again. We'll do a more structured video on some of your other thoughts on NVIDIA and Nebius and stuff like this.
Definitely appreciate you having me on, and hopefully I provided some bullish take, and sorry for the short time. I definitely, next time I'll give you a lot more time, and you can pick my brain a little bit more.
Perfect, man. Thanks. Guys, that is what the chip happened. He is the semi guy in this space. Okay. I'm just getting really excited about this entire industry. Nebius, CoreWeave, NVIDIA. I'm loving the way NVIDIA is playing this. I'm getting extremely excited. So first off, let's go back to CoreWeave in terms of the stock price. We're up nearly 13% again. In the last 5 days, we've gone from, like here at the end of Friday, we were $92 at close. The NVIDIA deal ended up getting spiked up, came back down at close of yesterday to under $100. And then the analysts started to come out. We had Needham Research say this is way too bullish. We had Deutsche Bank putting a $140 price target, saying this looks great from NVIDIA. They're essentially making sure that, CoreWeave can't fail. Like that's another way to potentially look at this. Like, they're just backstopping them at every end. And that might be because what Jose said, which I never thought about, they are just the perfect customer for them. Maybe it's a sell the news event. Wait, why can't I bring up? Okay, it's just delayed. Maybe it is a sell the news event. What I like about extremely fast growth companies, though, is if you end up waiting 6 months, 9 months, they usually fill into those valuations because these companies are growing so unbelievably fast. How many years of triple digit growths do you need to put up before whatever price evaluation you were looking at before becomes quite cheap. So I don't know. I'm not looking to chase this into a 20% growth or 20% acceleration on the stock in the last 2 days. That might not be the way to do it here. But, you know, interesting company that's backed by my largest company in my portfolio does seem very interesting. I like that. But who knows? I'll have Jose back on to talk about more of the specifics. And yeah, we'll find out if CoreWeave is the name of the game. Maybe it's Google. Maybe it's Amazon. Maybe it's Microsoft in terms of any of these cloud names. But I literally think like a larger and larger percentage of my portfolio needs to be investing in cloud names. Like this new product, like what we ended up seeing from Claude 4.5 Opus, we ended up showing this off the last couple of days. And the H100 rental costs have continued to climb up. That's showing that, you know, essentially the demand is outstripping the overall supply, right? Which maybe means that we're once again chip constrained, power constrained. And so all of these names are going to continue to, you know, find more and more revenue, more and more growth, higher margins that they can demand because, you know, they have more customers than they do have product. So that's great for investors. But I don't think, and I don't think many of you guys believe that Claude 4.5 is the last iteration of LLMs and tools that hook into Excel and our computers in general, or Mac Minis for the new Malt bot. It used to be Claude bot, but then Claude came after them. But the new Malt bot, like all of this is going to continue to, in my opinion, accelerate demand. The only concern is that what we end up seeing is concerns. That's so funny. Daniel tried to suggest maybe cash secured puts are the way to go here. And that could very much be the case. But instead, he accidentally typed cap first. And I think that's so much funnier being like, you're lying. Okay. I'm scared for SoFi every time they have good earnings, they dump. Well, let's take a look at that. I'm pretty sure Earnings Hub has a good piece on this. So we can go to Earnings Hub and where is it? Something here, I'll share my screen. I'll show you guys. However, I don't know if I know where to go. Price history. But it's price history during earnings. Sorry, here it is. Post earnings. So what they end up showing off is 24 hours before earnings and 24 hours after earnings. So is there times that they do dump after earnings? Yeah, down 10%, down 10%, down 6%. It does happen. But what we end up seeing is that, you know, that we've had up 28%, up 12%, up 20%, up 6%, up 5%. The nature that SoFi immediately dumps after earnings is just not backed by statistics. It just feels like that because it's a very volatile stock. There's a high beta name. It's crashing right now into earnings, which if I were to venture a bet, the month leading into SoFi is probably the biggest, you know, like indicator of whether it's going to crash after earnings or not. Because we know that earnings are going to be good. They've triple beat every single time. It's not whether they beat or miss on earnings based on, you know, growth. Like it's the earnings surprise and the revenue surprise has been green every single quarter since being a public company. So we know that that's going to be good. I have reason to believe it's going to be really good. I could be wrong. But this month heading into earnings is actually a little shaky. So the price is already a little depressed. I don't know if that means that earnings, after stellar earnings that pops up the stock, or pops up earnings and lowers margins, lowers multiples, meaning you're paying less for the company, means that investors are then going to sell it off once again. Don't believe it. Chip makers are still a better hold. TSM, ASML. I think those are great picks too. I think any amount of demand in this industry is going to have TSM's phone, ASM's phone ringing off the hook, you know? I think the rack scale companies, Dell, SMCI, I've got no problems with them either. Like, I just think overall demand is going to be good for the industry, and then it's going to bleed into the energy names and the Bloom energies, and I think they're all going to do well. I think it's just more of what can you follow? What do you have the most due diligence in, and would you know the fluctuations of the market if you were in them? Like Bloom Energy, I would be way too concerned about so many other factors affecting my stock price that I just couldn't follow it. For NVIDIA, I'm following a handful of names to know whether or not these customers are trying to build their own silicon, maybe going through Broadcom for that matter, or doing it on their own, going to AMD, Google, something like this. And that's pretty easily, like I can follow that. I find that really easy. Yeah. Okay. Let's see. Meg 6 is where it's at. Which one are you taking away? Sometimes I hear Meg 6 and people take away Tesla. Some people take away Apple. We got to get the specifics for the Meg 6. Or we can just say Meg 7. But yeah, I know there. It's funny, those actual 5 names, and maybe there's probably even a case to remove NVIDIA as well if you're worried about how potentially cyclical their business is. So maybe even just the 4, Google, Amazon, Meta, and Microsoft, are some of the most solid annual recurring, extremely diversified, fast growing, fortress balance sheet businesses that you can buy ever in history. You know? Are you buying more SoFi today? I've not actually bought anything in a little bit. I am a little bit fearful. So what I do want to buy is more big tech, more chip names. What's interesting to me is that I look at capital expenditures and I see, wow, these companies are expecting a lot of growth. And the market looks at it and they say, this company is spending our money. But the growth that we're enjoying is from them spending that capital expenditure years ago. So if they're ramping up that spend, it's because they see what's happening with Claude and OpenAI and Gemini, and these tools are becoming very useful. They're solving real problems. They're working 24/7. They're helping with deep due diligence. They're replacing, low think jobs. and so, yeah, it's just, I like the capital expenditures. I find it means that they're saying, hey, we're very confident in what we're doing here and we're seeing real results. NVIDIA is undervalued, solid buy. I completely agree with you, but it's by far the largest position in my portfolio. So I am not buying it here because it's already like 43% of my portfolio. Can't wait till OpenAI is bankrupt. I think what Jose said is actually a really good, like, you want as many competitors as possible. I don't think you want to give the positioning to any individual company, Anthropic, OpenAI, any of these businesses. I honestly think for NVIDIA and the chip makers and the energy names and all of these ones to suffice, you need to have as many names, like you don't want a moat. As funny as that is, you want a bunch of competitors that compete on pricing and are, scrambling every day to stay ahead. Can we get to 7,000 today? I have not even been following. 6,982 on the S&P, or SPX, I should say. Can we get there? I mean, Trump just needs to tweet a nice, happy tweet and move the markets a bit. Dude, ChatGPT has become so mean lately. What's it called? ChatGPT recently. Where was that post? I had it. Someone posted about ChatGPT. I think it was from The Information, maybe, talking about how they are targeting potentially like $60 of CPM, which is clicks per milli. Essentially just a way of pricing out how expensive their ads are to, if they were to be seen and by 1,000 people. But what's it called? That is so incredibly high. I think the comparison that was made from the article that I was reading was that Meta's is closer to about $20. YouTube, for the most part, is also around 20. And Super Bowl roughly does about 60. Now, the interesting part is that ChatGPT might be able to get to $60 if the conversion rates are so much higher because, it's artificial intelligence and they're really good at personalizing things. So I don't know how well they'll be able to do that. But my understanding is that if ChatGPT can do this, then it's not going to be far along that Meta will be able to do this, and many of the advertising names. And it's one of the other major themes in my portfolio is, buying a Meta, buying Amazon, partially because of their advertising play, buying Reddit, which is getting its absolute butt kicked on some recent reports that are saying that they don't believe that advertising growth is going to be as high as before. Currently, the consensus on Wall Street is 39% growth. I think the most recent report that came out that sank it today was saying that it's only going to grow at 34%. This was by Cleveland Research, warning that growth could slow as agencies see fewer new advertisers coming in and less confidence in scaling existing spend and cut its 2026 growth view. We'll see. Reddit has been able to, and I don't mean in a small way, they've been able to shatter revenue expectations. So even this, and being like, oh, you know what? From our initial checks, it doesn't look good. It's like your initial checks have led this company to put up some of the most severe revenue growth rates I've ever seen from companies in my life. Like, you have to realize some companies, especially ones that are this public facing, like Reddit or Amazon, like I can even bring up Amazon here as a good example. Let me bring up Amazon. Amazon here. What you can end up seeing is that EPS, I wish I could show with a better pointer than my mouse, but EPS can surprise massively, 20 plus percentages, 60%, 80%, because margins can fluctuate so much. You can change vendors, you can reduce staff. There's so many ways to potentially affect earnings per share, taxes, all this sort of stuff. But revenue surprises, meaning how much Wall Street consensus is set at versus what actually happens. These are usually very tight. Okay, 1%, 3%, 0%, 0%, 0%, 7%, 10%, not huge. This is Amazon. Reddit, take a look at their numbers. This is just insane. On revenue surprises, 6%, 17%, 6%, 5%, 10%, 11%, 14%. They have not been able to pin down this business. So while they say, oh, you know what, we see growth declining, maybe it's not declining as much as you think it is. You've not been so good at figuring this out so much. New is on fire. 'Tis the season for the rich to launder some money before tax season. Yeah, I don't know. I think it's mainly like if the DXY is down here. Let me close some tabs here. if the DXY is down, which is essentially the dollar index, that their international currency, which is what Nubank makes Brazilian reals, Mexican pesos. Is it Colombian peso? I think it's Colombian peso. They make this currency, and then it's denominated in their earnings calls in US dollars. So essentially, all you're saying is like, okay, well, if they can put up 40% growth and the US dollar is dropping, this could actually mean that they end up reporting even larger numbers, as long as they're not holding on to US dollars. But yeah, US dollar recently, well, not recently. We can go back, pretty far. It's been falling, but now falling even further as of late January. That could be another reason why Nubank is just seeing a little bit of excitement there. Okay, Hayden, thanks for the no, brother. Good question. I was wondering the same thing. Which question? Should not grab be high too, since it's not affected by the DXY? Well, I don't know their business particularly. Maybe they have US dollars or US investments. I'm not quite sure. Yeah. Okay. Good question. Robert's such a troll. I'm trying. Maybe that was the question. The grab question. Okay. Go Nebius, go. Let's take a look. 97, up 6.7%. I like this name. I like this name so much. 24.6% valuation. Not as much, debt as people would originally think. Growing way faster than CoreWeave, more on a factor of them being much smaller. Large part of their overall business is a large part of their overall business is Toloka and Triple 10 and mainly ClickHouse as well, that have been recently getting valuation updates that probably make up between $6 to $8 billion worth of their overall value, just in these companies that no one's paying attention to because they're mainly focused on Nebius. Nebius alone is growing faster than the entire group at like 400% year over year growth. So yeah. Okay. Wing or thigh? Isn't the real question like what are the different wings called between the two bone versus like the more drum wing? Or is that the question, wing or thigh? That's the real question. Are you adding to 4? I'm not adding to shift 4 right now. Flat, yeah. Flats versus drumsticks. Dude, camp drum all day long. Flats, I'm fine with. They're just it just takes more time to eat. Like I'll eat all of them, but drums all day long. Flats is not the way. Flats is like, oh, I prefer to eat slow and play with my food. Drum is just, Okay. Let's have a look at what are we talking about now? Well, the conversation just switched very quickly. we were talking about AI names as I'm just over the moon. So earlier to that question was more on would you buy Shift 4 right now? It's not that I'm anti Shift 4. I have it in my portfolio. I'm not going to trim. The hiccups are ridiculous. But what well, the world is figuring out whether Shift 4 is going to be hurt or hindered by stable coins or hindered by software potentially being disrupted with like just so much work that can be done with these new AI models. Nebius and CoreWeave and AMD and Nvidia and all of these companies continue to grow at 100+% rates in their revenue. I'm still fundamentally driven, right? It's just I don't think that the price to be paid, especially on a Nebius, is even that expensive. Like a flat wing, like the two side-by-side wings. Some people put the whole thing down their mouth. It's probably how a mid eats the wings, and then they oh man. And then you can pull all the meat off at once. Yeah. Okay. Imagine SoFi doing good for once, guys. You got to stop being so mean, man. It'll be fine. Let the market do what it wants to do. We've been here before. Remember, guys? Remember whenever we were doing this? This was pain. Actually, sorry, this was pain. This is where we were. There was no guarantee of an upside here. So sitting in this crevice of $4 to $10 back and forth, that was pain. This is just chilling. We'll be okay. Let management dilute whenever the stock is doing well. I mean, people are so. I want to talk about the dilution really quick because I know a lot of people get very concerned about this and they go, oh, just as we were doing well, now they ended up just worsening the shares as if we didn't get anything for it. You know, how about we just sold $1.5 billion worth of shares and what in return, what we got is $1.5 billion worth of dollars. What are they going to do with those dollars? Well, they're probably going to do exactly what they've been doing, putting them into loans, selling those loans, and putting up really, really high growth rates with good return on equity that we just wouldn't have been able to do ourselves. So whenever something's going well, I don't even know why people get so upset that they just want to accelerate that growth. What do you think ChatGPT and Anthropic and all these companies that are raising money? CoreWeave just sold $2 billion to NVIDIA. Their stock just got diluted by $2 billion. Why would they do that? Just as things were getting good. Because they want to grow faster. That's what I like about it. It's the moral of the story, trim for profit during the height. I mean, but it's the same instrument that they're trimming is to raise more cash to raise that instrument even higher. Okay. Are you in any Canadian stocks other than Shopify? No. FOMO, bag holders whining. I don't think you know what FOMO means. What's SoFi's fair value? It's hard to say. it's going to be a lot more clear whenever we see their level of growth going forward. Whenever you look at this company and you suggest that there's going to be 50 million members 5 years from now, which is what Anthony Noto ended up saying, that suggests a 35% member growth rate for 5+ years. The companies that have been able to do that with increasing margins, which is what SoFi has been able to do each and every quarter, I mean, they're valued extremely high with extremely high premiums. Maybe somewhere around $45, something like this, is what I think should be paid for that level of growth. Maybe even higher if you could guarantee that that's going to happen over 5 years. But the idea is that you can't, right? And that there will be black swan events. There will be, things that might threaten their potential growth. Thin Ice. Tanner is one bad earnings away from hiding in his sauna. Dude, I'm up multiples on SoFi. People are making it out to be like, wow, this must suck because you were talking about this company at 30. Now it's at 25. It's like, I was talking about this company at 4, at 5, at 6, at 7. Why isn't that being brought up? For real, like, guys, I sleep like this. Like, whenever you guys say, oh, you must be worried about SoFi's price, I sleep so good knowing that SoFi is above $25. That SoFi is above 20. Like, I couldn't care less. Sorry. How do you see the dip in Shopify? I think that this is people mainly concerned about the software names, that companies will be able to design their own software. But honestly, what I think it's going to do is that the extremely fast-moving companies like the Robinhoods of the world and the Shopifys and the Teslas of the world, what they are going to essentially enable is you still have the best engineers, the 10x engineers, the 100x engineers, and now you're enabling them with these extremely good software tools that helps them write code even faster. 10x engineers did not, by 10x engineers, I literally mean that there is a way to look at these, these people that work at Tesla and at Shopify and at Robinhood, that they are putting out 10x the production of new code. They're shipping 10x the amount of code than the average engineer that you would pay, $100,000+ a year. And there's 100x engineers, these people that just, are really good. But what I think that these AI tools like Claude Opus and all of these things are enabling is that these people can still continue to have these really fast rates of shipping, except now they have, stronger tools with them. I think that those people still work at Tesla. Those people still work at, Robinhood. They still work at Shopify. So I think that Shopify will end up just running that much faster. Their 6-month quarterly, their semi-annual releases for products where they end up showing off their 100 to 150 new products, which they call their summer and winter editions, will end up being, either more products and more solutions or tackling larger problems that they weren't able to do before. Toby Lutke, the CEO of Shopify, has essentially said that they are they're not going to hire new people unless they feel like even after the job with artificial intelligence cannot be done, or if they are going to hire new people or something like this, that they are extremely proficient with artificial intelligence tools. Like, it's one of the biggest things now. They're fully focused on it. So, I'm a big fan of Shopify. I think that it's more of, the market should be giving them more execution credit than they are right now, but we'll see. I need SoFi to pop so then I can add more Nebius. Interesting. I'm not going to be selling one to take the other. I like them both. They're both my children until they're bad, and then I'll sell them. Has anyone ever told you that you sound like Kermit the Frog? Dude, I don't even remotely sound like Kermit the Frog. Go listen to a Jordan Peterson podcast and then tell me that I sound like Kermit the Frog. Anthropic doubles VC fundraising round to $20 billion at $350 billion valuation on surging investor demand. I mean, come on. But could you imagine if SoFi investors held Anthropic, you'd be like, oh my God, they're diluting even more. ETH pumping? Ooh. I mean, it's not pumping that much, but it does look good. But we're still under 3,000. Just as it pumped here and then came back down. And now it's up and now it's coming back down. I don't really do price targets. Do you have any 2026 end of year price targets for Nebius? No. Higher than where it is today. Thinking about United Health. I think that exactly what's happening with UNH is exactly why I don't touch any healthcare or medical names or health names or anything along these lines. Is exactly what's happening with UNH. If you're not super in this industry and you're borrowing conviction from other people because other people said that the fundamentals look good, enough. There is a massive changing regulatory landscape. I would be far away from that space. Unless you're in that space. Unless you know it very well and you have an information advantage, then of course, play UNH and play Oscar or any of these names. I think that's fine. But I definitely don't. No, I do not have any money in Oscar. I don't have HIMS. I don't have Oscar. You guys will. The only healthcare name that I have is NVIDIA. Okay? That's the level of healthcare that I hold, is NVIDIA. Google, Amazon Pharmacy. Stuff like that, which are not healthcare names. Centrus Energy now up nearly 11% on the day, 312. Wow. Cloudflare up another 10.5%, hitting 218 on the day, now at $209 per share. Better Homes up 10%, IREN up 9.4%, TeraWolf up 8%, Bloom Energy up 7.7%, Cypher Mining up 6.7%, Nebius up 6.5% to $97. The AI trade is on. How heavyweight NVIDIA are you? About 43%. It's by far the largest name in my portfolio. By far. When is the Friday earnings? SoFi earnings are right in the morning, so the press release is going to be released at 7 a.m. Eastern Standard Time. 8 o'clock will be the call from 8 to 9. And then, yeah, we'll be live at 6:55 a.m. Right here. Yeah, I'll be going live, yeah. When would I start trimming NVIDIA? So it's actually not based on the price target as much as it's a percentage of my own portfolio. So I don't want to hold any individual stock name more than 50%. So I'm actually really close to trimming. What's interesting about that, though, is I'm going to break a lot of rules because I'm not going to stop myself from getting past 50%, trimming that every time that it passes 50% for NVIDIA, and buying something like Nebius or CoreWeave or AMD or Broadcom or something like this. So I'm not too worried about the sector diversification as I am NVIDIA specifically. I don't want to let an individual name, something happens to Jensen, something happens to Colette, anything that could bring the company down. I notice he gets short and grumpy very easily. Welcome, you must be new. Yeah. But for real, I measure my performance, my health performance on my Whoop, and it never actually says that my stress actually does go up. So I don't know what you call that, but I maybe I'm a drama queen. Maybe I'm a performative actor. Maybe I've taken too many years of drama class. Who knows what it was, but yeah. 10, you're one of the friendliest grumpy Canadians. Thank you. So why are all the fintech stocks so weak today? Probably about little concerns of dollar devaluation. Stress causes cancer. I'm not feeling stress. But yeah, I do. I would believe you. My recovery today, 85%. Not great, but I feel good. And my stress monitor, 0.06, low. I feel good. Okay. Okay. The AI bubble is about to pop. I just I think that you would need to see okay. I think the only way that the bubble pops for a name like NVIDIA is if we stop getting massive advancements in GPU performance. If we can continue to see, 70+%, 3x, 5x, 10x the performance every architecture change, which I think at least through Vera Feynman is going to be the case because they ended up showing off the rough performance of those chips, that we will continue to keep on this level of on this course. So I think that that's at least 2 more years of they know scientifically that they can, continue to squeeze out more performance. I think the bubble pops for the Chat GPTs and the Anthropics and stuff like this whenever they can stop showing that they can't solve new problems each and every month. But I don't know if we're seeing that. I think Anthropic is showing they're tackling huge problems or huge solutions with massive financial institutions to help with high frequency trading with artificial intelligence and Excel. They recently just had this big showcase of Anthropic on Excel, actually changing the cells and doing all these things. That's going to advance, any financial worker's job or accountant or anything like this. Those are massive benefits in how much those people can get done every day. I think that they would pay a lot for that type of, solution. So I don't know. If you're making $300,000, $200,000 a year, and you're working in Excel all day, how much can Anthropic charge to give you a solution that could greatly benefit your work. $1,000 a month, $2,000 a month. You pay it like that because it just immediately solves like how many more clients as an accountant or whatever could you go out and get if a large part of your work is solved or working overnight? I think a lot of people don't realize that as well. Like I think like a lot of the agentic work is like, okay, let's set it this 20 tasks. And by the way, I didn't even think of those 20 tasks. I asked Claude to give me 20 tasks. And then I said, okay, these ones work. I need you to work on these. Start now. I'm going to go to bed. And then you let me know what you've done whenever I get back. That's freaking awesome. You know, you pay a lot for that. Do you have your eye on any thoughts on energy names to play the AI power constraint? The only one that I've really taken a look at is Bloom Energy. And I just realized I don't really need to play those names. Like, I think they'll do well. But I also do worry that like NVIDIA is going to solve a little bit of the energy concern. And I always just worry that like at the end of the day, the models will solve the token concern. The the chips are going to solve the energy concern, and like it all bleeds down to what the customer wants. So I like to stay closest to the customers than getting further and further and further back. So I like holding the Metas and the Amazons and the Microsofts and that are taking payment directly from the customer. And then I also like holding NVIDIA because I think they're the biggest winner because those companies are going directly to NVIDIA to buy their chips. Did you buy any Toro? No, not yet. Prediction market. Will Tanner permanently snap in rage before the AI bubble pops? No, I would bet no on that. It would have to pop and then I would rage because then I'd lose a lot of money. If the bubble doesn't pop and it just keeps inflating, there's no rage. I'm happily getting richer. Hey Tanner, it's okay to dilute, but they should at least be clear on why they did it and stop sandbagging. I agree. I think what people wanted them to do though is declare that they were going to dilute before they diluted, saying, "Hey, we are about to dilute." No company in the history of ever is going to do that. So, yeah. What do you think about Pagaya? In my opinion, it's really cheap. It's on my short list of companies to look up. Not that I know what they do, but I mean like really understand their business. And then I think what you guys saw from me in terms of the recent not deep dives, but first impressions and videos on eToro, you'll probably start to see from me for other businesses like Pagaya, like CoreWeave, like some of these names. I actually really enjoyed just putting out some of my thoughts on these new companies, even before I've purchased them, just like giving you guys my thoughts on those names. Can't brew your own coffee. I do sometimes. And then you know what I realize? My coffee sucks. I actually don't like it as much at all. But I do sometimes, like since the snowstorm that's been going on recently, there were a lot of days that I was like, okay, well, I don't have time to go out and like, or maybe the roads weren't good or something like this. So I was like, okay, I'll just brew a pot. But I don't like it. It's like $1.50 or something. Like it's cheap as ever. Did the snowstorm hit you? Oh yeah. Not terribly. Some other places in Canada got it like really bad. I'd need to look at it what it was in Fahrenheit. Celsius to Fahrenheit. I think there were some things like it got as low as I think like 22 or 25 or something like that. But then felt like negative 28, 29. So Fahrenheit negative 20 was maybe the worst that I got it. Yeah. I love this Anthropic news. Anthropic doubles VC funding to $20 billion on surging investor demand. It's so funny how they all take their turns on being the biggest winner. It's just ChatGPT hasn't been the biggest winner in a while. They were the biggest winner for a very long time. And then Gemini became that company. Anthropic's taking the lead now. Will Meta ever get their hands on the, sort of the baton here? Lead the AI race? I don't know. But I'm going to hold them just to find out. Tanner needs to experiment using different types of coffee makers. French press is my favorite. I have tried a French press, and yeah, fine. Guys, it's $1. It's $1. It's $1 for a large coffee. It's not even remotely warm anymore. Like I don't have enough care. I actually think ChatGPT's users much closer to like the mid 900 millions of weekly active users. Yeah, they are still doing well. People are calling for their demise really early. Okay. Well, I don't think that Meta will need to raise. That's not really what I'm suggesting. I just think like the stock will do well if people think that the new Meta AI products are worth using. Help me with this part of my day. Like try to do what Anthropic did with Claude Work, Claude Code, what Gemini did with Gemini 3 and VO 3.1 and Nano Banana. Like some of these tools just blew up in excitement. And so their stock prices blew up as well. Obviously, Anthropic's getting a good valuation right now, ton of VC demand. That's very beneficial. But like Google, we go back here, we look like their stock has just taken off. And that's not on people realizing, oh, Google search is back in vogue. That's on the thought of, hey, Gemini is doing really well. Nespresso, I actually don't like Nespresso. Like they put that foam on top of your coffee. I just don't like it. I understand that people do. But yeah. Meta wants 700. Okay. I thought maybe we had ticked up today. I was like, whoa. No, we are just ever so slightly red. Guys, you guys are typing espresso. I'm saying Nespresso, the coffee maker. It has a foam on top. I can drink espresso. I'm talking about Nespresso, which is what the comments said. And actually, I can drink an espresso. I'm not anti-espresso. What I really like is like an Americano, an iced Americano. Yummy. Okay. Instant coffee? No, I don't think so. Anyone saw Eric Trump's tweet? Okay, let's check this out. Eric Trump, something big is coming. I'm not seeing it. In 4 months, 22 days since our public debut on NASDAQ, American Bitcoin Corp has sprinted past the company after yeah, I don't. No. A free workplace for scientists to write and collaborate on research powered by ChatGPT 5.2. OpenAI just posted. Okay, let's have a look at this real quick. Prism by OpenAI. Okay, so by the way, as we're looking at this, big tech earnings like are right here, guys. Get ready. Meta news. Turn images into technical diagrams. And I think this is completely free to use, by the way, for ChatGPT. Maybe this is one of those things where it's completely free to use, but then they want to share in the profits of whatever you end up discovering. Who knows? Okay. Parsival is here. What's up, brother? Well, I think that I think Bloom Energy is in vogue right now, and people are. This is why the token prices and Nvidia and all these companies are running up, is so people can create stuff like this. This is what we're paying for, ladies and gentlemen. It's also what I look like at the gym. It is kind of weird to think about that, like it's the same tool, just like the internet, right? Like there is a lot of stuff that's being created that's very important. But with that, there's also many people that or many designs and stuff like this that are absolutely useless. A little bit of the Wild West. Okay. Let's go have a look back at the news. So we talked about Reddit, CoreWeave, the reason why those names are running. We had Jose on. Oh, we were talking yesterday about the factories of the future, which would be, completely autonomous, no humans working in them, lights off. Well, Xiaomi ended up showing this off, this factory without lights that is fully autonomous and 100% works 24/7 to make like a cell phone every second. And then like the top comment on the thing said something like, "Who is buying a cell phone every second?" And I'm like, oh my God. I think they do it to make me angry. Like I go crazy. But yeah, fully autonomous. We're going to live in a strange futuristic world very soon. Bro, is Canuck offensive? I don't think so. I, for real, have never been offended, like anything along those lines. Yeah, I would have to say no. Okay. Dark factories are coming. Okay. Crazy tech and deteriorating infrastructure is my guess. Okay. All right, chill. No one calls me that anymore. Any off topic? No one calls me the. I can't even say it. I want to say it so bad, but I'm not going to. It's offensive. That is offensive. Reminder that Amazon owns 15% stake in Anthropic. Honestly, even I forget that from time to time. Like, I'll have to be reminded sometimes where someone says like, "Oh yeah," and they own a massive stake in Anthropic, and I'm like, "Oh yeah, yeah, I forgot about that." This company that's raising at $350 billion valuation that, Amazon owns a large stake of. However, maybe a less of a stake because they just raised $20 billion at the exact same valuation. Will help a little bit with Amazon's overall holdings. Little venture arm. Do you know what Amit's mom wanted to name him when they were born? No. If SoFi is a bank, and that means deposits, that means FDIC insured. Does this vanish overnight? If SoFi is a bank, and that means deposit, that means FDIC insured. Does this vanish overnight? My thoughts are no. No. New bank just hit all-time highs? Yeah, I mean, today it did, yeah. That is super exciting. 1856. But I'm going to celebrate, clap the hands, throw up the graduation cap whenever it hits 20. The real test is whenever it hits $38, which I think it will be 10x from my initial position. And that one will have been another one that I have, purchased on stream. Like everything. You guys saw back whenever I purchased it, January 2023 to, hopefully whatever it grows into. Chat's not up. Oh, sorry. I took chat down whenever Jose was on. I didn't want the chat overlaying his face. How long can AI companies raise money? Well, I think a lot more than where we are right now. Not saying that they will. I think that a lot of investors will like them to head into profitability eventually. But I think that as long as they can prove out that, and we're not just talking about speculative growth, we're talking about real growth. Like Anthropic had gone from $100 million in revenue to $1 billion the next year to $10 billion the next year. And they think that they can hold up a good amount of growth going forward. Like not a 10x every year, but continuing to hold up some level of high multiple. If that can continue to happen, then that's going to please investors and they can continue to raise higher valuations. Sorry, back to my thoughts on Lemonade. You're right. Not on Lemonade. I saw a comment on Lemonade. I don't have a comment on Lemonade. On Coinbase, it's just going to have to matter on when crypto comes back. Like the dollar's hurting, but that's forcing people into gold and silver. Imagine you get the trade right. Okay, the dollar's going to devalue. I'm going to put all my money into Bitcoin. You were right, but you were also wrong. UPS 30,000 drivers got laid off. I know. I reached out to Amit. He said his job was fine. So, yeah. You will miss your Tesla shares. My hope is that I get back into Tesla. But Nvidia is so sold off right now, and there's a lot of other names that I really like and want to hold on to, CoreWeave and Nebius and all this stuff. you know, I want to buy those first. But yeah, I do eventually want to get back into Tesla. Bro, do you know if Mitt microblades his eyebrows? I do not know. However, I would put, like, if this is a poly market event, I'd put it at 90%. There's a high chance that he microblades his eyebrows. He likes to take care of himself. You know, the beard's on point. He gets his nails done, his toenails done. I don't know what he does, but he's a mani-pedi type of guy. And those what does that fall under? Like a metrosexual type male, a man that likes to look good, can also microblade his eyebrows. And it's a bad bee. Okay. Your thoughts on Coinbase? I just gave them to you. I think maybe I didn't. I think that they're going to do great, but crypto's in the dumps. What are your thoughts on the nickname Tanner Manson? I mean, that goes kind of hard. I don't know of another person with a nickname that is their full name. You know, Tanner Vera Manson. How are algorithms likely to react when Meta reports quarter-over-quarter growth of 600 to 700%? You're right. That's very funny. Honestly, what I'm thinking, because most times they end up looking at year-over-year growth, but what happens in Q3 of 2026 whenever that year-over-year growth is? I'd like to think that it wouldn't react too dramatically. Bro, I'd cry. They will do that. That's not even a joke. The reason why they're going to report 600 to 800% is because their EPS was so unbelievably shot because of their tax report last quarter. So they will end up showing growth like in the hundreds of percentages. He's right. Stefan is on point here. Meta is going to 1,000 by tomorrow. Okay, let's have a look at the earnings calendar. See what we have. So tonight, Texas Instruments, Seagate, you know, these sort of names, Logitech, I guess, might be interesting. Tomorrow morning, ASML. Should I go live for that? Live for ASML? Would you guys listen to ASML? Could be important. Well, it also matters when tomorrow morning, because it might not be the same time that I think it will. Oh, 1 a.m. Okay, that's what I suspected. Yeah, so I will not be gonna stream that. Tesla, Microsoft, Meta, ServiceNow. I think the company that I'm going to listen to is going to be Meta. Just because might be the most interesting, most explosive name just because of the recent changes. 2026 CapEx. Up or down? I'd like to think up, but honestly, 2026 guidance is what's going to hang on the balance of all these major tech names. Microsoft, Meta, Google, all of them. What's your take on Meta? I like Meta. I hold Meta. Might be one of my biggest excitable names for 2026 in terms of risk reward. Like if you were to ask me, hey, what are some names that could outperform Nebius or I gave it away. What could outperform Meta? I'd say maybe Nebius, but there's concerns, right? What if we have another DeepSeek moment? Nebius ends up falling 40%. Does Meta fall 40%? No. Keep an eye on ServiceNow. Yeah, I like ServiceNow. I think they'll do well also. Are you buying into all the Zeta hype? I'm not buying into the Zeta. Like, there's a thing about hype, and then there's a thing about, okay, well, what are their financials actually telling us? And their financials are great. They've got more cash than debt. They've got a good enterprise value. The multiple's not bad. The growth is good. They're beating expectations. They're sandbagging. Like, I don't think that there's anything. Yeah, I've got nothing against Zeta. I think that I just have concerns about the visibility into that industry. And what I mean by that is that it's much easier for me to make a bet on a Reddit or a Meta and play those advertising names and be able to monitor the customer growth, the agencies that are tapping into those systems and all of those things on a day-to-day basis, rather than having to wait the quarterly reports to end up hearing how they've been doing. And the concern by waiting to the quarterly reports is that we run into a trade desk type situation. Tesla earnings are way more interesting. There'll be 1,000 people covering Tesla earnings. So my other concern is, like, if you want to go watch those, I honestly would push you in the direction of a Mitt or a Farzad or some of these guys that will end up covering those. I don't know how many people will be covering Meta, and I definitely have a lot to say about that name. So I think I'll be more useful there. What are your Q4 expectations on Hood? I recently showed this off, but I would say over 30% growth year over year. If you were to ask me, though, and I said this a long time ago, who's going to have more growth this quarter year over year? It's going to be SoFi. But yeah. Amit is covering Meta and doing Tesla Q&A after. Well, maybe I'll reach out to him and we can do that together. Yeah. Or let me call him. He might not answer, though. This guy's been in meetings. Let's see. No answer. Declined. One word he sent me. Meeting. What? I said, okay. I called him. He said meeting, and then he said, let's do 8 p.m. tonight. I have no idea what that's even about. Sure, buddy. Let's do 8 p.m. tonight. He said, okay. He said all of them. Are you listening to a call? He said he's going to do Meta first, then Tesla. Oh, okay. I might just join him then. Okay, we'll be joining Amit's show tomorrow. Did you mean? Yeah, grab. Oh, I think I just whispered that. Okay, I might be doing a grab thing with him. Let's do that. Okay. All right. All done. Work's done. What are you grabbing? You guys need to chill. Grab is up 4.7%. Okay. What do you think about Rubric? I don't know much about Rubric. My understanding is that they're awesome. Okay. And I do want a cybersecurity name. But I also know like Google ended up buying, one of the fastest growing cybersecurity cloud names in the world, Wix. Or sorry, not Wix, Wiz. And I like the diversification there already. They can kind of do the due diligence for me. That's nice. Okay, come on, Amit. Relax, bro. Okay. Jeez, this guy. Are you adding to shop here at 5-month lows? I'm actually not, just because of the total amount that I'm currently holding. I want to build up some of these smaller positions and get a little bit more diversified. So much of my overall portfolio is in my top 5 names, which is, NVIDIA, Shopify, SoFi, Nubank, Robinhood. And I could probably take a look here. It's probably like over 70% of my portfolio, or like 75%. A ton. Probably even more than that. But so I just don't want to continue to divert or add to those and concentrate. I want to be a little bit diversified and actually put more of my money into the Mag 7 names. Seriously, fintech heavy. I'm the fintech guy, baby. You know why it is? It's not like I really do like fintech. I think it's I have key principles whenever I'm investing. Let me pull up the market so then we can have a look at some things. But I'm a principled investor. Okay, so what I mean by that is that I want companies that have one, high growth, high margin. Fintech can supply both of those. In the names that I have specifically picked, that's definitely true. Nubank, SoFi, Robinhood, these are the top names. But then even then, like whenever I say top 5, NVIDIA, here, wait, let me just go ahead. I'll just share with you guys some stats about my portfolio. So as of today, NVIDIA makes up for 44.1% of my portfolio. Shopify, 16%, SoFi, 10.6%, Hood, 5.7%, Nubank, it's out of order. Nubank, 6.2%, Robinhood, 5.7%. Okay. That is such a large percentage of my portfolio. That's like, over 75%. I then have, 5, 10, let's say 14 other names that make up for the rest of that pie. Okay. So I need to build those out. I've got high convictions in other names, but they're like, a good reason why they're not as large, you know, like BM&R, for example. Well, I'm not even building that one out, but like that's an extremely small position for me, you know? And I told you guys, like do not make it a super big position. Like keep those names under 5%. None of the REITs? No, not at all. I have 100% tech names, all like I'm software, AI. I have essentially two names that I really want to build out in my portfolio. And they build into a lot of things, but essentially artificial intelligence and blockchain. But blockchain bleeds into a bunch of things. So those are sort of my big, huge categories. Underneath those are, under artificial intelligence, I think of advertising, software, semis. Sort of those are maybe the big themes that I've been investing in. In the blockchain side, I'm thinking e-commerce, financial tech, and let me just check the thing real quick. Yeah, that's pretty much it. E-commerce, fintech, payments. So, but those two main themes I really like. So whenever you look at my portfolio and you go, oh, wow, SoFi, Nubank, Robinhood, like this is a lot. NVIDIA makes up for more than all of them put together. Need more hood? I do need more hood, but you know what? Whenever I started building my position, for real, guys, I bottom ticked that purchase. Like earnings brought it up to 20. It fell after earnings, and there were so many reasons for why that happened. Large private equity investments; those people wanted out of public accounts, so they sold on good earnings. They used the good earnings as exit liquidity, but still brought the stock down from essentially 20 down to 17, and then the next day was 16, and then that's when I started buying. Okay, $17, $16. After that, there was not a day of entry until two main periods. The yen carry trade, which is when I bought, and then Liberation Day, which is also whenever I bought. So, and so it went from 17 to 35 to 100 to 150 back down to 100 roughly. There was no like massive buy the dip opportunity for me to really, really build out my case. And I don't really sell often in order to buy new positions. I buy whenever I build up cash, whenever I'm making money. I can make money from, a variety of different ways. Hopefully it's covered calls and cash secured puts and these sort of things that also help with my cash in the portfolio. But that's even small relative to, the overall pie. So I add slow, and the main percentage of where I see my account growth is equity. Sorry, I should say position growth, not account growth. Everyone's account growth is from stocks going up, but the position growth, a lot of it is market gains. So NVIDIA is like, for real, my average cost or the total amount of dollars that I have invested in SoFi is larger than my total amount of dollars invested in NVIDIA. Just, my NVIDIA position exploded. So usually a lot of the companies that are really high up in my portfolio are just there simply because they're, I've been holding them for a long time. Tesla used to be my second biggest position before, until I sold that in 2025. But that was just a lot of market gains. I do remember Tesla actually was the first stock I purchased in 2015. And then I sold it almost like a week later for like $40 worth of gains because I thought that's what I was doing. And then my second stock that I bought was a company called Tweed, which is now known as Canopy Growth Corporation. And then that's whenever I really, really got invested. And I didn't sell that one and kept adding to it because I knew that legalization was coming. It was going to be like an 18-month, 24-month play. And then I got extremely lucky on that. It was about a 12x return. The company was about $4, sold it for $48, and then it ran to $72. So all my friends who I got invested in and was telling about this was making fun of me because I sold too early. But now it's a penny stock and it's in the gutter and it's absolute dog shit. But I remember reading an article about how I remember reading an article about how what was it? If all of the capacity of, you know, Tweed and Aurora Cannabis and Tilray and all of those companies at the time were to supply the Canadian marijuana industry, they would be able to have to sell enough for every single Canadian, which not every single Canadian participates in marijuana use. For me, for example, you know, I don't do it. And so they said they could supply it in Canada 3 times over. I was like, okay, well, now we have a TAM problem. And then that's why I ended up selling it at $48. The market continued to run into absolute mania, but yeah. Yeah. Midwest Cannabis said, just say no. I for real have no problems with cannabis or anything. I just don't like affecting my mind. Like, I don't really like alcohol. I don't like marijuana. I like caffeine because it doesn't really change. Like, I don't find them slowed or anything like this. I just find them like I'm just me. So do you like cocaine? Do I look like someone that gets offered cocaine? You know, I've never had cocaine in my life. Swear on everything that's holy, okay? Never tried, never would. But like, if you put it down to the understanding of the effects, I'd probably be addicted. Like, what? You're sharper. You can go about your day. There's a little pick me up. No, but I care a lot about my health, and my understanding is that cocaine's not so good for you. So I would never do it. A bunch of you guys thought that I was doing cocaine because I was turning off my camera, but like I said, I was just blowing my nose. So I'd always come back like. Not a freaking chance would I ever do hard drugs. Anyone that knows me, like, and has been around me, just knows I'm for real like a loser. Okay, like, I'm not getting into peer pressure. I'm not down like YOLO. You know, you only like. This is our moment. We're only young this one time. No, bro. I've always been into like, let's invest for my retirement. Let's take things a little bit safer. And, you know, always make sure you eat your vegetables. It's like coffee, but white. That's so funny. That's so that's well written. Okay. Let's go to Amazon. Up 2.55% on Amazon. 244 heading into earnings season. Gotta love it. How are you not single? I'm not sure, dude. I'm not sure. The craziest thing is my girlfriend's beautiful. She's smart. She works hard. She comes from an insanely like amazing family. And then I'm just here. Like you know, I need help getting dressed. Absolutely useless. I'm good at one thing. I'm good at stocks. And yeah, maybe she likes me for my money. I don't know. But she has daddy issues. I mean, I don't think you're wrong. I don't know her biological father. Oh God. She doesn't have a stepdad. She has a dad who stepped up. Okay. Frick. Redwire's up 28.4% today. You guys are the freaking best, man. I love the comedy that comes out of these. Oh, okay, wait. Sorry, I want to read this. I care about this. Sorry. For the hymns, viewers, you're going to be happy. But I don't care about the stock as much as I care about I actually do want to read about the biomarkers here. HIMSS updates labs page with full biomarker breakdown and confirms $350 year pricing. $500 was crossed out for $350 per year, confirmed as new price. Top banner, get in depth lab testing for less than $1 per day. Full biomarker breakdowns now live show exactly what's tested 1 to 2 times per year, all 10 vital health areas. Is this available in Canada? Because I would for real sign up. Yeah, I absolutely would sign up for this. Let's see. I'm pretty sure they did acquire a business so then they could bring HIMSS Labs to Canada, but I don't think that actually happened yet, right? Is HIMSS Labs available in Canada? Nothing's available in Canada. Well, it's so true. The idea of getting biomarkers and all that stuff done at home rather than going in to go see a doctor and everything like this, like, oh my gosh, sign me up. I'm so excited. Parsival says, and I trust Parsival, very, very smart dude. Home health tests are not accurate at all. It's a huge scam. You need to give a vial of blood for accurate tests. Saliva and drops of blood are all just money grabbing nonsense. All right, I take it back. Bro, it was an accident. I'm going to short HIMSS now. But you don't think that the actual results of the test could improve over time? Maybe they've found some, because I don't know how much they are going to, is HIMSS the type of company to just sell a BS product? Another Elizabeth Holmes in the making. Yeah. Don't do it, Tanner. Well, it's $350 a year. Like, if I get scammed, it's all good. Okay. Okay. Let's get back to the markets. What are we buying for real? Hers overhauled homepage is now only focused on weight loss. Things change. All right. Also, should we create a Whoop group? Whoop community for our YouTube? How many of you guys have Whoops? I heard there was some controversy with Whoop and some female tennis players or something that recently happened. They were trying to wear their Whoops, but they're not allowed to have any devices on them at all times. I want a Whoop for golfing. Is it worth it? For real, people call it expensive. It legitimately is not. Like, You'll go out and go buy a Garmin or something like this, or an Apple Watch, as some person just said, which they said is better. It's absolutely not better. But or Garmin, people will spend like $1,000 on a Garmin and then go, yeah, it's cheaper, and then they'll end up buying a new one in 3 years. It's like this is $240 a year. I think just subscriptions scare the heck out of people, because then they break down the numbers like, oh, okay, well, I'm spending $20 a month or something like this just for a band to tell me how stressed out I am. But for real, like whenever I think about, okay, anytime that they make a new device, they're going to send it to me for free. You know, the Garmin's and everything like this, you have to continuously buy the new ones. The Apple Watches, you have to continuously buy the new ones. And also, like, I like an actual watch. Like if I'm going to wear a watch, I'll put on a regular watch or something. That's fine. But the Whoop, so okay, I have this, which is doing okay. It's the Samsung Galaxy watch or whatever. It was reading fine, and there was no concerns there. But then I'd have to take it off whenever doing certain activities. I'd have to charge it, and then whenever it's charged, then I have to remember to put it back on. The Whoop never take it off, ever. In the sauna, shower, everything. Whenever you have to charge it, it charges on your wrist. Like, it's so cool. This is the charger. It has its own battery. You just slide it on, and then it charges. So you just walk around. And then, so I never remember to, or I never have to, remember to put it on. It's just always on. So yeah, I like it a lot. I've had the same Garmin for 4 years. Well, now you're at the same price as what a Whoop is. This Whoop, you know how long the battery is? 15 days. 15 freaking days. I was doing yoga, and don't make fun of me, okay? Really cool guys do yoga. I was doing hot yoga, and I got out of the room after I was done, and it said automatic or auto detected your activity, yoga. And I was like, no. How? How are you so cool? Is your wrist dirty? No, I shower. I also make sure that I scrub the band and everything. So I just go through, get underneath the sensor and everything. Yeah. Sodak Zach says, I do wife with yoga and the kids. I do yoga with wife and the kids. Dude, I saw Zach. He posted his family, a portrait of his family on Discord. This guy is living. He's a beautiful man with a beautiful family, fit as all ever, trying to figure out stocks and everything. You shouldn't be listening to me. We should be listening to Zach. This guy's got his life put together. He's the freaking man. I'm not a super fan of subscriptions, but also there's like some where I'm like it's nothing. Does it interfere with holding hands? Guys, you guys are acting like you've never had something around your wrist. It's like, like, does a watch or something like this interfere with you being able to hold hands? It's even smaller than a watch, just tiny. I like it a lot. I've been super impressed. I just got my Whoop age or whatever, like how young it believes like biologically I am versus how old I actually am. And it says I'm something like 2.6 years or something younger than I actually am. Something like that. Almost 3 years. It says I need to walk more. Yeah. Why Whoop over Aura? Because rings are dumb. Yeah, I just don't like rings. Okay. My metabolic age, yeah. They just call it a Whoop age, but yeah, my metabolic age. Can you eat with it on? The Garmin Phoenix kicks its ass. The Garmin does that with the screen. I don't like the screen. It kills the battery. My metabolic age is 6 years younger than my actual age. Brother, you're killing it. I need to get up more. That's my problem. I think that it does not care as much about like the weightlifting as much as it cares about heart health. It cares a lot about getting your strain up via running. Like that's the one thing that I noticed about all the activity bands that like Garmin's, everything like this. They prefer you to be a runner. What's your thoughts on SoFi pumping into on earnings? I think it's high just because it hasn't been pumping, and I think that the earnings will do well. You know, if we end up taking a look at the last, let's say 3 months, but earnings was there. So let's try to line that up real quick. We're down about 15% since earnings, since good earnings. And then on top of that, what I think is going to be good earnings in Q4. Okay. Garmin does all that and more. This guy is a Garmin salesman. I'll say it right here. I'll say it live and in public. Screw Garmin. No, I've got nothing against Garmin. I like Whoop. I bought a Whoop. There's nothing you can do about it. When do you think it's going to be added into the S&P? Well, I would like to think earlier rather than later, but I've been wrong. They've been public a long time. They continue to grow. If they end up putting up strong 2026 guidance, which a lot of people have suggested could be the case, because then that could help Anthony Noto get to his targets, which honestly, he is most impacted by the dilution. Like whenever we talk about, the targets that they've put up in terms of, $35 to get to his performance-based stock units, $45. Whenever he dilutes, he gets further away from those prices that essentially they need to get to by March. That's hard. But what's it called? Do I think that they're going to get added into the S&P 500? Yes. When? Hard to tell. This year is what I would likely say. Hopefully earlier rather than later. What do you think about PayPal earnings? Oh boy, if they guide poorly. So this is whenever I originally sold PayPal was Q4 of 2024, because they ended up putting up guidance for 2025. I was like, dude, this is not it. This sucks. And then they proceeded to show a year that was kind of meh. If they show 2026 and that is also depressing in terms of overall growth, which could very much be the case, boy, oh boy, would that suck. I would not be a fan of PayPal, no matter how cheap they are, if they end up putting up like really bad guidance for 2026. We'll have to see. I'll be I don't. Is that Tuesday? I'll be live for Tuesday. Monday, which I think is Palantir, I will not be live for. You think Meta will crush? Absolutely. Huge Q4 earnings. Holiday spending season. AI's done very well. I think they'll do great. Conversions on ads will be high. That's what I meant by AI doing well. They will get taken private if they go down another 10%. I mean, maybe. For real, maybe. Okay. BMNR actually running. Up 5% today. 29.25. Yeah. Can I get a picture with you at the meetup? 1,000%, bro. I'm so excited. Staples, I didn't know. Am I right? Is your name Staples or was Steve right? Please don't tell me. I think he called you Staples. If that's right, then no picture. So speak, like, get it right now. Yeah, you're right. Okay. And I can't wait to hang out. Dude, I'm super excited to meet everyone that's going to be there. I can't wait. I didn't even know that you were going. I'm really happy. You've been in the chat a long time. Will you show your legs at the meetup? No. Japanese blur from the hips down. Okay. Let's go ahead and take a look at BMNR really quick. Up 5, maybe a little Ethereum push. Maybe Mr. Beast just put out a video. I mean, doing a little bit better than ETH. Do you know if Dookie Pie is going? I don't think so. It would be a long way for her to go. I think she's in Norway, right? I'm not going to the Los Angeles meetup. However, I do think that I'm going to do my own meetup, probably here in Toronto. Maybe I'll just do like one annual one. I can't do what Amit does. He likes to travel. I freaking hate it, so I'm just going to have it in my own town. And that'll probably be much closer to like August, September, something like that, where it's nice and warm. And then, yeah. Mr. Beast is doing the Salesforce Super Bowl ad. I saw that on X. Pretty cool. Kelly made it out to the last Toronto meetup. She was there with, Amit and Tevis and all of us. And we ended up going to this, like, the most hipster little bar that Tevis brought us in that, like, for real, didn't have a sign. It didn't have anything. It was just this hole in the wall. And then we went in there and then they were like, hey, like, get whatever you want. We're closing. Like, and I don't mean closing for the night. They were like, this is coming to an end. Like, the business is dead. But yeah. And Tevis is a little hipster. Like, he really is. Like, I was in his apartment. There's no TV, no nothing. He has like his studio where he streams. And then there's like a ton of books and a bookshelf and then a record player beside it. And then he offered me wine. And I was like, bro, you're a serial killer. Get a TV. Like, watch watch a single television show, please. He does have an awesome view of the city. I'm not going to dox him, but yeah, he's got a great pad. Okay. Tevis is a minimalist. Oh, 100%. That's the vibe. I've never been to Canada. I might need to come. Well, the great thing is that you'll get to meet me in person the first time. That'll get to decide if you want to see me again. You might be like, you know what? I'm pretty full of that Tanner guy. Okay. Let's see if there's any other news. I didn't even check on CNBC or any of these things to see if there's been big interviews today. Let's have a look. Medtronic CEO, former Cleveland Fed president. Wow, Kelly gifting 5 gifted subs. Thanks, Kelly. You don't have to do that. Thank you so much. UNH down 20 now? Oh, no. Oh, gosh. Who, like, are we going to get a bunch of super investors stepping in here? Does Buffett step in to try to catch the bottom here? Or are they just fully out? American Airlines projects revenue growth for 2026. Meta announces a deal of up to $6 billion with Corning to supply fiber optic cables for data centers. We could listen to that. I don't even really care. Do you guys care? Let's have a listen to this 1 minute long Meta video.
Announcing a multi-year agreement with Corning to supply fiber optic cables for its data centers. That partnership is valued up to $6 billion, and it will be used to support U.S. manufacturing with a 15 to 20% increase in jobs at Corning's North Carolina facilities. Take a look at shares of Meta this morning. They are up by about 0.25 percentage point. Shares of Corning, bigger deal for them. They are up by about 3.5% on this right now. You can read much more on this story on CNBC.com. And a programming note for you, Corning CEO Wendell Weeks will join us right here tomorrow. We'll talk to him about this and much more. Very interesting on this. My quick read on this is, anytime you look at a deal where they're kind of propping each other up, you think circular deals. But this sounds really like Corning says, sure, we will give you a lot of the fiber optic cables that you need, but you're going to have to take on some of the risk in terms of making sure you're helping us pay for those things with a $6 billion investment. That's just my quick read on this, but we'll talk more to Wendell Weeks about this tomorrow. And right now, Corning
circularity
shares,
or not.
I don't know if this is circularity as much as it's, we can build it. There's a huge amount of demand for it, but you're going to have to help us pay for producing the stuff to feed into that demand to make sure that it doesn't disappear overnight. You're going to be helping us do that. So again, those shares are moving on that by about 4.5%.
This circular financing stuff is driving me nuts. Like we said with Jose at the beginning of the show, the CoreWeave deal with NVIDIA, they got $2 billion. By the way, NVIDIA got common equity out of that. And then what CoreWeave is going to do is essentially choose NVIDIA as their main, not only chip, but not only GPU, I should say, but all their chips. So, using Bluefield and InfiniBand and a whole bunch of Spectrum X stuff that they are going to essentially set up all their data centers using NVIDIA software or NVIDIA hardware and software. And that's going to be to the tune of 5 gigawatts worth of sales, which to NVIDIA is roughly about $150 to $200 billion worth of revenue. And they paid $2 billion and got equity for it. That's not circular financing. That's saying, hey, we own the whole market and we choose who gets our chips first. We dominate, we win. You're going to buy 100x what we're going to pay you here. Ladies and gentlemen, it is 3:15, which means I'm 45 minutes over time. But thank you all so much for watching. Really do appreciate your time. I was having a lot of fun. What can I say? You guys are the best. Thank you all so much for watching. Until next time, bye for now. Dang stutter.